Harald, welcome back.
Hey,
Time
good to
flies,
talk
huh?
to you, Dale.
Yeah, time flies. It's like, I don't know, the older I get, the faster it flies. So good to see you.
Yep.
Chinese New Year is your backdrop. Why?
Ah, beginning with China, um, everything has changed dramatically in the last 6 weeks, and the news has completely missed what took place. And I think the markets also have missed. Uh, Let me make it simple. Um, Xi Jinping has become really nervous about um, problems of disloyalty or questioning of him internally, and he's worried about what the U.S. is up to in terms of turning off technology to China. So he did something remarkable. Uh, since Mao, state security, their espionage and national security agency was inside the Communist Party. But within the last few weeks, he removed it from the party, established it as a separate agency reporting only to him, so that the CCP, the party, is now under supervision of state security. Now, what it means, boiled down, is that he transformed what was a centralized socialist communist economy into a police state. And under the new rules, already, for example, in Hong Kong, there's a trial of Jimmy Lai, the biggest journalist, producer, and he was warned in court that the charges against him were now a matter of state security. He's a British citizen, but he was told you can't have British lawyers. All the Chinese domestic laws are null and void. You are now under supervision directly of state security. Now, what this means to the markets is from now on, any kind of business transaction, contract, commitments are up for grabs because they can be subject to change. And that's why they have now started raiding U.S. companies like Bain.
And Micron recently, right, Harold?
Yeah, this is all part of a process of intimidation.
Why don't they go for Apple, Harold? It would help my position. Why won't they go for Apple?
Well, my advice to Apple is you better hurry up and get out of there before they take the rest. But Apple is somehow very cozy with the wealthy families in China, so they're going out slowly. They are exiting, but also they're having trouble finding enough qualified workers in India and other such places. So, but what this means is everything's up for grabs. Every business in China is subject to interruption at any time for reasons that no one will understand, because the laws don't matter, the contracts don't matter. So this is a big change. Now, what's happening in the currency market, I can tell you, I'm very close with Singapore. And I have clients that are family offices in Singapore. These family offices, are Chinese money that has moved to Singapore. And the amount of money in the last few weeks is huge. We're talking hundreds of billions of dollars moved. Now, you won't see it so easily because it's done in the most complicated ways. Now,
and is that what's behind yuan weakness? Here's the U.S. dollar yuan chart up here, Harold. Yuan getting
part of it, and part of it is Chinese policy. They're talking about stimulus, but only to developers, but they're not talking about stimulus to people who owe money. They're not talking about real domestic stimulus. So if you know China and you're in it or betting on it, you have to say, there's no way forward unless they let the yuan go. So right now it's at, let's say,
$7.13.
7.13. It'll go to 7.20 soon. Probably hit a pause, but where it will be 3 or 4 months, at least 30-40. It's going down, and it's going to
Okay,
create
so 740 was the high in 22.
We're going back there.
That's going back quite a 22 if I go back,
Yep.
Oh yeah, I see. If I go back to 07, it was 82.
Yeah, it's going to keep going for a while. It's a matter of time.
You're the second smart guy I know who, well, besides the guys here on the team that are very bearish of yuan, bullish a dollar and bearish a yuan.
Yep. I think
so the policy is security over profit.
That's right.
That's and that's why they're starting to say, get out of here. So why can't G just say, don't buy iPhones anymore? We manufacture phones, and really take down an icon. And how long are they going to do this before they actually go ahead and cross the straits and invade Taiwan? Is it next year, Harold? Is the drumbeat getting loud enough with all these close calls on the South China Sea and in the air with Russia that we're edging closer and closer to a hot war?
Hard to say. Xi Jinping is running everything. It's a one-man show. And, I was deeply involved with Russia in the Cold War. And early on, it was a one-man show. First Joseph Stalin, and then various others. Hard to predict. However, the Chinese military is not really ready. And there is a concern in the military. Our military is also making a calculation that with the birth rate collapsing and the young women in China refusing to have any kids, if they go to war with the U.S. firepower is so great that they would probably lose 2/3 or more of their manpower in one battle. Whether they win or lose Taiwan, they have to rebuild the military, and they don't have the young people base to do it. So they are already, their military
sounds like more of a U.S. case for let's take them on now. I see the U.S. poking the tiger in the eye over and over again. You have contacts in the government. When are we going to war with China? And what is when are we going to do it? Because we know as time goes on, it doesn't work to our advantage, right? If we're going to do it, we need to do it if you're a warmonger and you want the hegemony.
I got to give you a hesitation on that. Our military is way ahead of the journalism about the state of China. They now know that China, number one, has stopped growing and will not resume high growth again. That the high growth story is over. So second, they believe that the economy will start to show visible signs of decline soon and will continue. So now I'm familiar with this because I just did a paper with a colleague on what is really going on in China. And that paper somehow found its way all the way to the top command in the Pacific of the U.S. military. And I've had feedback. They are convinced that China is now facing catastrophic choice. If they go ahead, it's not at all clear they can come out of it strong. And but if they do nothing, Xi Jinping is worried about all this congressional pressure to lock up technology transfer and block U.S. investment in China. So what's happening is China, outside investment into China in the first 3 months of this year, first 4 months, is shrinking to almost nothing. It's really, really amazing, the drop in incoming capital into China at the same time that their export orders, they have export orders from the neighborhood, the Southeast Asian countries, but export orders from Europe and the US are really almost no increase. So they're now facing that they may have to lift the economy internally, but they don't have the capability to do it. So they're in a mess. I doubt whether they are able to decide to go to war at this moment.
Okay. All right. Usually, when things are bad economically, that's usually when the government stirs up nationalism to distract the population from them not having enough rice to eat.
Yeah, that's the old theory. But war has become so bloody expensive.
Yeah.
Wars are not the way they used to be. You want to go to war, your starting price for war is $500 billion and going up depending on how long you want to fight.
Yeah.
They're not ready for that.
Okay. All right. So let's switch gears to another war. Will the Ukrainians have success on their counteroffensive trying to retake Crimea?
They'll have some success, but I think what's going on behind all the discussions back and forth, U.S. and China, I think Biden and Xi are going to take a chance to work together, lean on Putin, and start ceasefire talks.
Okay.
And
negotiate it out.
Yeah, that would be a big plus for Biden. It would be a big plus for Xi because it would make him look like a peacemaker. So that's going on in the background, and we'll see how it plays out in the coming weeks.
Wouldn't the worst case scenario be that Ukraine is too successful, that they embarrass Putin on the battlefield, and he feels desperate enough to use the tactical nukes he's put in Belarus?
Well, that's what everybody's worried about.
Okay.
I have a lot of, it's, we just don't know about that, but humiliation would be bad.
Yeah.
So whatever is done has to be not humiliating. Now, there are other things going on in the background. Number one, liquidity in the financial markets is drying up. Banks in Europe are not lending. U.S. banks are not lending.
Yeah.
So all the lending that's going on is from non-bank credit.
I was going to just go there. Great segue. So, before your previous interview, you had sent me some work on the shadow banking system.
Right.
So that's the only source of credit now. And you were worried about the credit event that you were worried about wasn't SVB, was it?
No.
Okay. And that wasn't credit then. That was solvency because of their negative positions in bonds, right?
Yeah, and I'm not worried about our regular banking system. We have some hiccups, but it's the
Do you think that the banks, and this is floating around here, I want to ask you only for my benefit if I should go to the bank today, are we coming closer to banks being put some type of law or rule to limit cash withdrawals from your account?
No. The problem is not with the banks. Now, to put it in perspective, the non-bank area, yeah, you think private equity, but the non-bank credit providers include big insurance companies, endowments, um, um, pension funds like
Okay.
CalPERS. They're all
Yeah.
in this. They're all lending money. Now, the size of non-bank financing is 60% of the total credit market in the U.S. It used to be smaller. The banks are only 40%. So we're going to see a lot of pressure. It's going to build probably most visible in commercial real estate.
Yeah.
And by the way, commercial real estate in Europe is really vulnerable. I think you'll see that's where the pain really starts to show. But a lot of investors, including insurance companies, have big portfolios in commercial real estate. When the
Yeah.
market goes down, they're going to have to unload some of that. We have a credit
We have a pension crisis brewing, and the
yes.
pension guarantee fund is just a couple of drops of water compared
Right.
to. Is that going to be a public bailout of the pension system?
Well, we bail out
Why'd you
every.
laugh? Why'd you laugh?
Well, it seems to be the government. Every time we have pressure, we bail out whoever it is.
Right.
At some point, we're going to run out of
Yeah. All right.
the
Well,
ability.
let's talk about this then. Okay. A little bit about the debt ceiling. So here's your like long-term treasury chart right here. That's a
Right.
TLT. It's like the 20-year bond. So the narrative is, now that we have a debt ceiling passed, the Treasury has to fill up their pipeline again with
Right.
cash by offering notes and bonds. And to me, when I look at this chart, it looks like yields could go higher. That the low that we put in October, which was the high in yields,
Yep.
could give way, and we could make another low. Do you think that there's
Yep.
going to? Are we in a sovereign debt crisis here?
And I'm not worried about the dollar. We can talk about that after.
The bonds, not the dollar, the bonds, the debt. Are we in? Who's going to buy all? Who's the buyer for all the bonds that are going to come to market?
The buyer is going to be many.
Not China.
No, but Europe, Latin America.
Okay.
Yeah.
So you still think there's an appetite?
Every time there's a bond auction by the Treasury, but whatever the maturity, in recent weeks, every time foreign buyers are 3/4 or more of the buyers. I mean, there's no problem. It's not a problem. It's not a dollar problem. It's a problem all over the world, and
debt
and the borrowing of Treasury in the next few weeks is so big, it's going to trigger credit contraction among the non-bank lenders. We're going to see at the beginning, going into the second half of this year,
crowding out.
That's right. We're going to crowding out, and it's going to be very painful, and the recession will finally become real, and it will become deep.
Okay. When will the Johnny-come-latelys recognize we're in a depression? Is it going to take a stock market decline for people to say, hey, I guess there's something wrong? Because the markets have been very strong as of late.
Well, yes, but the biggest market participants, the giants, they're all going to cash, getting ready for what they see is coming. So mostly people in the market now are retail. And as always, they're the ones who are going to get stripped when it all happens.
Okay. Who's going to be the Republican candidate for president next year?
Well,
you know everything. Come on, Harold. Who is it?
Look, the list is growing,
Is it going to be
the-
Trump Biden again in 24, Harold? Your
he
gut.
will try. I can't bet for a reason unrelated to everybody else. The
Okay.
prosecution of Biden, the serious parts begin in Georgia, and then this documents
Yeah.
thing everybody thinks is misplaced paper. What's the problem? The, the real problem is some of those papers were made available to the Saudis and maybe the Russians. So there is a question, who did it? Was it Trump or was it his son-in-law? That's the speculation. And how bad does it hurt him?
Okay.
Now, take Trump's personality, if his son-in-law goes down, probably he would shrug his shoulders and not worry about it.
Yeah. See you in 20. Do you like the gold market in this environment?
Yeah, in this environment where everything is going to look really unfirm, you don't know where to grasp it. I think that anxiety is going to raise gold as at least something that seems to be insulated from the turmoil. So where I know it's popular to say gold may be in for another downturn, but given the world that I see of total confusion and credit contraction that is severe, I think gold will look better.
How about oil? OPEC keeps the Saudis and OPEC keep trying to cut supply, and they get rallies for a week or so that end up fizzling out. And there's also talk about Russia leaving OPEC. What's your view on oil? 100 or 50?
No, it's probably going down. The demand, its problem is demand is so
destruction.
Weak.
Yeah.
It's demand destruction.
Yeah.
And so there's a downside maybe, but there is no upside from here. I mean, you'll get plenty of people who tell you why it must go up, but the answer is there's no demand.
Okay. Well, take away from Harold if you have, go ahead. You have something to add to that?
Just the economies of Europe and most of the developing world, with the exception of India, are all going to be in contraction or near contraction. So the demand for oil is going to diminish. It's going to, it diminishes. And nobody's factoring in a global downturn. Nobody's thinking about it, but that's what's coming. Very weak. U.S. maybe not as badly hit as everybody else. The dollar probably gets stronger because it'll be the only safe place to park.
Okay.
And all this phony baloney alternative currencies will crash because if you try to load a boat and ship it somewhere, you're going to need letters of credit and you're going to need international insurance. And the only place you can get that is in London or New York in dollars. So all these people talking about what is barter is fine, but you can't, that's not money. If you want money, you have to go to the dollar to make the deal.
Yeah. So just like Jim Cramer says that that earnings are the mother's milk of equities, credit is the lifeblood of the economy, and that's going away. So, and also the takeaway that if you're, still doing business in China, think about it. And the yuan.
Think about it, not too long.
Yeah, get going. Yeah, get out of there. And it's a shame we have to get out of here, Harold. But great talking to you. What are you telling people to do? Just cash and gold for the next 6-12 months and just be concerned about keeping the return of capital instead of the return on capital?
Yeah, yeah, absolutely.
Okay.
The earnings are going to be coming down. This is the time for safety
Okay.
and consolidation to prepare for the opportunities coming.
Okay. Yeah, because it'll be after this contraction, you look for a recovery and a renewal and maybe something very nice on the other end of the dark tunnel.
Yeah, and I think it'll be U.S. led.
Okay.
Because we have so much technology coming. I mean, I just think the U.S. will come out well ahead of all the other countries.
Okay. Spoken objectively from a patriotic American, Harald Malmgren. And Harald, thanks so much. We'll be catching up with you in the fall, and we'll see a lot of these things should be manifesting by then, don't you think?
Yep. Well,
All
let's
right.
see. Unfortunately, everything I've been saying for the last several months I've been hitting it, nailing it. So I hope I'm right, but I see no reason to doubt what I'm saying. Okay. And nice to talk to you, Dale.
All right, Harald Malmgren, everyone follow him on Twitter at Hal's Rethink. He'll make you rethink like he does every time I talk to him. My appreciation to you, Harald, for being a contributor here on F.A.C.E. Thank you very much.
Bye.
All right, that's a wrap, everyone. You could join the team in 17 minutes on the Morning Edge. Hope you enjoyed Harald. Play this interview again and get prepped. And don't just count your pips, count your blessings. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.